Yeah, and that's the thing. Like, it really isn't a bad business. It does check off some of the boxes, but let's go through it here. So this came in from Gene via YouTube. It was a YouTube comment. Again, BlueMetric Environmental, BLM on the TSX Venture, currently trading at a price of about 74 cents and a market cap of just under $25 million. So they provide clean technology and professional services or environmental consulting in the fields of environmental geosciences and engineering, industrial hygiene, occupational health and safety, renewable energy, water and wastewater treatment, environmental contracting, and environmental management. And if we look at the breakdown of revenue by market in the last quarter, about 42% comes from commercial and industrial, 18% from government, and 21% from military, and about 19% are coming from mining. And the company is really the go-to water expert for the Canadian National Defence and the Royal Canadian Navy. So this is a stock that we followed for some time, given its fundamentals, and we actually interviewed management back in 2021 while the stock traded in the 60-cent range and had a price to earnings multiple of about 4.7 times. So it looked cheap then. But while the company did trade with low valuation multiples and maintained a healthy balance sheet, the growth outlook going forward remained in question, and the CEO had very little insider ownership, which essentially resulted us to stay on the sidelines. Now, looking at the financial results for the most recent quarter, Q3 of 2024, ended June 30th, 2024, revenue was up about 17% to $8.1 million. Just keep a note that it is quite lumpy. It is a contract driven business, so it can be quite lumpy, the revenue. Adjusted EBITDA was $302,000, up from a loss of $674,000 for Q3 of 2023. And net income was only $26,000 or 0 cents essentially per share, compared to a loss of $729,000 or 2 cents per share in Q3 of 2023. And if we look longer term, we can see that there really hasn't been a good trajectory of growth in revenue or EPS, as since 2014, revenue has grown with a compound annual growth rate of just 2.8%, and EPS has been very volatile. And this was really one of our questions when we did speak with the CEO back in 2021 is, what's the growth strategy here? And looking right now at the trailing valuations, the stock trades at about 23 times trailing earnings and about 14 times trailing enterprise value to EBITDA. And looking at the balance sheet, it had about $2.2 million in cash with $3.1 million in debt and leases, providing a slight net debt position of about $1 million. And the company has a trailing net debt to EBITDA multiple of about 0.5 times, which is reasonable. But just to look here, if we didn't include leases as part of debt, the company would have a net cash position of approximately $1.7 million. Now, some operational updates. On September 24th, 2024, BlueMetric announced the acquisition of Gemini Water, which designs, builds, installs, and commissions large-scale desalination and wastewater treatment systems across 22 locations in the Caribbean as well as Texas. And the purchase price was about 4.1 million Canadian. And they also issued about 2.35 million shares of their stock. And for the trailing 12-month period ending June 30th of 2024, Gemini's revenue stood at just under 10 million Canadian, with EBITDA margins exceeding 10%, they said, their historical EBITDA margins. So note that the balance sheet will be impacted by this deal, considering it was closed after the last quarter. But if we just do some napkin math, and if we use the forward EBITDA margin of 10% on its revenue of approximately 10 million on that acquisition, and also include that $4 million purchase price impacting the balance sheet, I get an approximate forward enterprise value to EBITDA multiple of about 10 times. So it looks a little bit more reasonable. Now, on September 3rd, BlueMetric provided an update and growth initiatives, including focusing on the clean tech side of the business. That's what they indicate. And they also wanted to expand its geographic footprint outside of Canada. And they're also looking for potential acquisitions, such as the one that they made with Gemini Water, looking into the US and the Caribbean. And lastly, here, just on October 14th, the company also began trading on the OTCQX under the ticker symbol BLMWF. And the CEO indicated that the trading debut coincides with the company's strategic expansion into the U.S. market through its recent acquisition of Gemini Water. So that really seems to be what the growth story is now. Geographic location, tapping into the U.S. But let's conclude here. So again, I think BlueMetric is a decent business, but growth has been quite minimal over the years. The company has a solid balance sheet and remains profitable. But given the minimal growth over the last decade, fundamentally, the business remains pricey on trailing numbers. But if growth can increase, its 10 times enterprise value to EBITDA multiple looks more reasonable. But whether there's an opportunity there paying that price, it's really up to whether that growth, will ramp up, I guess. So again, I think that BlueMetric is a good company, but the growth remains under question, which is really, a show me story. The geographic expansion strategy looks good on paper, but we need to see management execute on this. As in 2021, when we spoke with management, the growth story that we heard at that time was really focused on expanding its mining revenue, or at least that's what I was writing down in my notes and what I got across. Now, if an investor wanted to take a bit of a flyer and bet management will be able to ramp up growth, there could potentially be an opportunity. But again, it's higher risk. And this is what they would be betting on, which, of course, there's no guarantee. And, just going off of our previous kind of conversation, I'd on insider ownership, I'd also like to see the CEO have larger insider ownership, as he only holds about 61,000 shares, which is quite minimal. And his last purchase in the open market was in September of 2022. And, I'll also note that when we spoke with Scott in 2021, he had just exercised over 500,000 options at 24 cents, but immediately sold them into the market at 72 cents per share, which was a bit of a red flag to us at the time. Given if he held on to the shares, it would have been a much better vouch of confidence for future growth. And I'll just pull this up here. You can see that, looking at like total insider ownership, they do have management and board of directors does own, 6.7%, and current and former employees and insiders own about, 33.7%. I believe the initial founding CEO owns, a couple million shares. So there is insider ownership here, but, I'd really like to see the CEO, increase that position. And we really haven't seen him buy much, since, 2022. And his insider ownership really just remains small with, only 61,000 shares that he holds. So yeah, that's my segment. Again, good company. But I think that, you're just really gambling more on whether growth will continue. And it's a contract driven business. We might all of a sudden see revenue come down and, earnings come down, and the stock price also, again, coming down, which we've seen time and time again with the stock.
Yeah. And there is a contract that they are executing on right now that's coming through to in 2025. And that has impacted margins in the near term. But again, the valuations right now are kind of factoring in that contract will come through. They will execute on that in 2025 and have better margins. So, we think it's probably fairly valued just where it is right now. We'll continue to monitor it.
Fairly valued, assuming that growth comes through.
Yeah,
I would argue overvalued.
Yeah.
In my, if I were looking at like 10 times EV to EBITDA forward, no historic track record of growth, barely breakthrough earnings, I'd want to see that at 3 to 5 times EBITDA myself. Now, I'm not saying the stock price is going to go down in half. I'm just, that would be my margin of safety.
No, I mean fairly valued if they execute on that contract over the course of this year. Yeah. So what is your upside? Potentially they execute on it at a far better rate. But again, at 10 times, it's a 10 times EBITDA margin that you're valuing it based on, right?
Oh yeah. Yeah. EBITDA margin, or at least that was what they were doing for the acquisition.
Okay. Yeah. Okay.
Well, on the actual, so trailing is about 14 times, right? EV to EBITDA is what I remember. Yeah. So even